for the last 2 days, Asia has not been doing very well. The Japanese market has seen quite a big cut come through.
Sustaining above 20,850 is important. I mean, if we do that, we open up levels to about 21,100.
The markets open up, gap up. The Nifty is holding at around the 20,950 odd mark.
FII capital into emerging markets, including India, drying up and even going negative.
Our focus is to really grow category, grow our market share.
We do not think the RBI lets their guard down either on liquidity or on the hawkish noise that we have been hearing in the recent past.
We have a very aggressive plan in hydro sector, and we are going very well in our hydro projects.
We did slip a little bit, around 0.3%. From that level, there's been around a 50-point recovery.
CLSA is today written on two-wheelers and it has downgraded these stocks.
Madhuri Specialty Chemicals, it will be foraying into manufacturing of lithium and battery components. There is some consolidation. It's been range-bound, and that is something which is par for course after the stellar rally that we saw in last two trading sessions.
Consolidation, but with a positive bias. That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar, and with me is Nigel D'Souza. Nigel, again, this is going to constitute a good trading session, right? Yeah. We started off strong. The Nifty opened at levels of 20,950. So now we're very close to the 21,000 level. Intraday, we had a 100-point dip. The Nifty went down to 20,850. And again, in the last hour, there has been buying. And now the Nifty is comfortably above 20,900. And look at the distance to 21,000. The countdown has begun. And the Nifty is just about 65 points away from that level. So holding on to a positive bias, the advanced decline ratio is today in favor of the gaining side. Remember, yesterday, it was skewed in favor of the declining stocks. But today, you've got a positive advanced decline ratio. Mid-caps are holding up in the green. It's just the Nifty Bank. After 3-4 days of big gains, today you are seeing some, profit booking maybe, but the loss is not much, just down about 150 points on the Nifty Bank. And if you look at the constituents, HDFC Bank continues to see buying. So while ICICI Bank has taken a bit of a leg down, but HDFC Bank has a green tick going for itself. IT and Pharma, these were a bit of the underperforming sectors in the last 7-day rally. They've come up today. Two-wheelers, though, are under pressure. Eicher Motors, Bajaj, Hero MotoCorp. That's where you are seeing some red.
Well, that's right, Reema. If you just take a look at it, the markets have come off the high point of the day, right? The intraday chart should come up for you. We were on our way to move to around 21,000 odd, but the high of the day was made in the first 10 minutes. And the Nifty Bank, it's pausing for breath, and now it appears the baton has been taken over by the IT names. So Nifty IT index comes up for you, and ITC as well has bounced back. Remember, post the announcement with regard to what they want to do on the hotel business, the stock corrected from around 490 all the way to around 430. Today, we are seeing some bit of buying as well. And the mid-caps, it appears, consolidated a little bit, but they've had a very, very sharp run in this year so far. So some kind of consolidation is par for the course, I would say. The Nifty Bank, that's the swing factor. Even the last 60 minutes, that's going to be the swing factor. You have the day's low of around 46,750. That's around 120 points away from current levels. The Nifty Bank plays out the weekly expiry. So that's why that could be a little bit volatile of sorts. And HDFC Bank, just pull up a year-to-date chart of HDFC Bank. That's a crucial one in there. That's been one of the underperformers this year. And today it's holding high with a gain of 0.3%. But year-to-date, that one has moved into the green. So it's maintaining that record, after seeing a lot of pressure, all across the year. Finally, HDFC Bank has moved into the green. It's positive for the year. And I think we should get that flashed for you on the screen as well, because it will be the 10th straight year that HDFC Bank is on course to maintain that winning streak that we have seen. So important cue coming in there. HDFC Bank positive for 2023 so far. How do you position yourself, though, for the final hour of trade? Mitesh Thakkar joins us to fill us in with his strategies. Mitesh, well, some kind of consolidation, Nifty Bank pulling back a little bit. I mean, can barely call it a pullback, 150 points down. But how would you trade the index, and as well as give us a couple of picks?
So, Nigel, I think there is some kind of a pullback going on the Nifty Bank. It's down by about 150 points, as you said. But I think closer to levels of 46,500, I suspect the Nifty Bank should do very well, and strong buying can re-emerge around those levels. Similarly, on the Nifty 20,500. Now, we may or may not get those levels, but the idea is that till those levels are breached, I think maintaining a long bias is very important. And I think on the upside, I would look at targets of around 48,500 on the Bank Nifty and roughly around 21,600 and then possibly even 22,000 on the Nifty. So very positive in the medium term. But yes, in the short term, given the fact that we have had a rally for last few days, good chance that there could be a couple of days of consolidation or pullback, which I would want to suggest people to buy into. And as and when the levels come in, we'll fire trades as well. On the stock side, I have a buy on GNFC, and a lot of fertilizer stocks are seeing good breakouts today. So GNFC is a buy with a stop at 723 for targets of 785. And IEX has come on the buy list after a long time. Recommend buying here with a stop at 144.5 for targets of 155.
Thank you very much for that. Let's begin the show by putting the spotlight on the auto space. Sudarshan is joining in with the key highlights from CLSA's note on two-wheelers. Sudarshan?
Two-wheeler stocks are in focus, with most of these stocks are currently down in the range of 1 to 3%. CLSA has today written on two-wheelers and it has downgraded these stocks, saying that these stocks are fairly valued, led by sharp rally. It has downgraded Bajaj Auto to underperform and target is rupees 6,382 per share. It has downgraded Eicher Motors to underperform and target is rupees 4,129 per share. Hero Motor is downgraded to outperform from buy and target is rupees 4,127 per share. It has maintained sell call on TVS Motor and target is rupees 1,378 per share. CLSA says it expects margins in electric two-wheelers to remain challenging in the near term.
Okay, that's the CLSA view on two-wheelers. Prakash Diwan is now with us on the show. Prakash, most of the two-wheelers have done well, barring an Eicher Motors. So this year, Eicher Motors is, at least compared to the rest of the pack, has been under pressure due to competitive reasons, the launch of premium bikes by its competitors. What's your view on Eicher Motors in particular? And amongst the two-wheelers, do you think Hero MotoCorp is looking good now that there is some pickup in rural demand?
Good afternoon, Rima. So, two-wheelers is very interesting. It's been so kaleidoscopic in terms of market share, in terms of growth expectations, that every quarter, virtually, the leadership has been changing in terms of what to expect. I mean, 2 quarters back, we had TVS revving on all cylinders, and then we had Bajaj Auto make such a super comeback thanks to some of the export markets reviving themselves. I think Eicher and Hero have kind of been lying low for very simple reason that they've not had any serious launches except for the premiumization that Hero tried, and that's just like a very small sliver of the market share, right? So it's not something which can really move the needle for a company with such a significant balance sheet and a volume for very clearly massy bikes and not very high-end bikes. I think out of Eicher and Hero, if I had to pick, it would be the revival seems more promising in Hero. We've not yet seen the demand pick up in the rural segments. But where things change is that if raw material costs throughout the year have been benign, they haven't had to increase prices. It's only the four-wheeler guys who are talking about moving prices up from January 1st, starting off with Maruti, and probably some of the others will follow. But the two-wheeler pack is still very high on, the gap between what they can sell and what the demand really seems like. So come January, that could change because, there are lots of incentivization that could start coming back, which has been off the markets for some time. I would believe Hero will probably be much better poised. You will probably see a pause in TVS and Bajaj. Eicher might take some more time, if they have some plans to kind of rejig their portfolio, there's a different look at that. But I would believe Hero is the one that could look at if you get it on lower levels. The risk reward seems to be extremely favorable there.
Okay, all right. Hi, Prakash. Good afternoon. Prakash, what about Honasa? There's going to be some supply that's coming in there. A couple of sessions ago, you had Jefferies that came out with the note. They were talking about a target of 500 rupees plus. But they were also estimating the profitability is going to go up big time. The street cannot wait for FY 26-27. The stock almost went to 500 rupees on that day itself, sometime in the last 7-8 sessions. But now it's at around 380. The problem is there is an overhang because there's going to be some selling that's going to come in once those locked shares, they get unlocked. How would you view the stock at around 380 rupees? Growth is there. They're talking about profitable growth now. Would you be a buyer?
Not really, Nigel. So even the other day when Jeffries came up with a report and the stock kind of was in such a strong mood, I did mention that, it's very similar to what Nykaa went through. I mean, the exuberance around the stock is understandable. It's in a very promising space. It has a very significant brand recall. Things could be very different for them. But look at the valuations. I mean, it's so simple. Something which is, let's say, far more staple, far more universally accepted and bought by consumers, like groceries and staples. And I'm talking about, yesterday there was this meat from Patanjali, and Patanjali on a trailing basis is still 65p. I mean, you have a company which is very niche, very, narrow segment, finicky customers. They could move, there's not much of brand loyalty as yet for, Mama kind of products. And then you give them such a premium, it probably is difficult to last. So my sense is that till the supply is absorbed, the stock might not find the right price equilibrium. And once that happens and then the growth comes in, you're better off because you're buying the stock at a well-discovered level and you have growth which is very clearly visible instead of just a promise. So let's wait for that. If you look at the numbers, you could probably see the stock come down to about 330, 350 zones very easily. So if that happens, good. And if you've not kind of bought more, you could still have that opportunity to do it if you didn't have in the IPO and things like that. But I would wait for some more time before taking a buy decision.
Got that. Let's talk about oil marketing companies. They're in focus for the second straight day. Citi has upgraded the target price for HPCL, BPCL, IOCL. Sonal joins in with the details. Sonal.
Well, yes, looks like the positive comments around OMCs will not end very soon because there's another very bullish note that we've seen on oil marketing companies, this time coming in from Citi. They've upgraded FY25 EBITDA by 9 to 17%. This is on higher GRM forecast. This is across all the three stocks. In fact, the target price has seen a sharp uptick as well. For HPCL, it has been raised by 34% to come in at 450 rupees a share, for BPCL by 24% at 560 rupees a share, and for IOCL by 47%. To come in at 125 rupees a share. They say that despite the recent run-up, they see ample room for upside from current levels. In their pecking order, they like HPCL the most, followed by BPCL and then IOCL. They say the triggers will lead to reversion of the ratios to 6 times target EV to EBITDA from 5.5 times, because now after state elections where no measures were taken with fuel pricing, they think it will not happen in central elections as well, and that will be the key to track as well. And regional GRMs will stay at mid to peak cycles, and that is something that they are very bullish on. So both marketing and refining segment will do well according to Citi, and that's why they're bullish on all these three stocks.
Thank you very much for that. Prakash, you want to weigh in on oil marketing companies? They've had a fantastic run-up. A lot of it has actually happened in the month of November. But would you bet for more gains, or do you think the best is behind now?
No, not at all. Not at all, Prima. I think, it's just begun. And especially for HPCL, I don't think people have rated it even fully. It's not even halfway there, if you ask me. But of course, I'm talking from a slightly longer-term perspective. We spoke about this some time back when HPCL was just about 300 and IOC about 90, 92 when the dividend was announced. Both these stocks are now sitting at a asset base which is so productive. The kind of return ratios that they are generating, they're not even valued. HPCL could probably do close to 18,000 crores, on a quarterly run rate. Now, if that EBITDA is kind of extrapolated, you are getting the stock somewhere close to 2 times of earnings. Now, PE multiples of 2, 2.1, 2.2 are unthinkable for something which has such huge replacement costs. So, I think they will continue to do well, but there will be phases, Rima, where they will again go sideways because they're not stocks which are very popular from an institutional perspective. But people who hold them and continue to earn dividends do not usually exit very easily. So you'll not see supply coming in, and then that's the reason why there's been such a sharp run-up. So don't get derailed in terms of your expectation from the sharp run-up. The run-up could pause, consolidate, but HPCL at 500 at some point in the next 12, 18 months and IOC at 150 is all within the realm of possibilities.
Okay, all right. Thanks a lot for that, Prakash. I'll tell you what, let's do one thing. Let's slip into a short break. You come back, we'll get back to our chat with Prakash. We'll also be joined by Devina, founder, chairperson and MD at First Global on the other side. Welcome back. Headed towards the high point of the day yet again. So the markets refuse to move lower. The Nifty Bank, well, that's the one as well that's recovered close to around 250 points from the low point of the day. And I think L&T, that's the one that's decided I'm going to take over today. If the Nifty Bank's not going to perform, L&T has moved up. Tata Motors as well as another stock that's fighting back as we speak. And IT, TCS is another stock. These are larger weights on the index, so I'm just highlighting a few of them because they are spiking up. Explains why the markets are making their dash back to the high point of the day. But let's focus on an exclusive. Sources tell us here at CNBC-TV18 that Sterling & Wilson is looking to do some fundraise. Vivek's on top of that. He's joining in to fill us in with more on that. Vivek?
Well, absolutely right. What we understand from our sources, and this is regarding Sterling & Wilson Renewable Energy, we understand that the company is looking to raise up to 1,500 crores and the fundraising will be done via the QIP route. We in fact understand that the fundraising may happen quite soon, as early as next week itself. We also understand that there could be a slight discount to the current market price, for the fundraising that may be done. And the company is basically doing the fundraising in order to go ahead and further pare their debt down lower in order to go ahead and achieve a net debt zero status. Now, when you're talking about the company itself, a couple of key developments that we're tracking. Number one, earlier we had reported that the company is in the final stages of bagging a $2.2 billion order from the Nigerian government. Not only that, the company's promoter entities recently paid back dues worth over 418 crore, and the company made the disclosure to the exchanges on December 2nd. Along with that, in November, the company had made a disclosure to the exchanges saying they had reached a settlement agreement with one of their suppliers, which is called Jinko Solar, and the company is also anticipating this particular payment to come in mid-December itself. The quantum of this payment is 238 crore. So with the inflow of all of these funds, the company hopes to be net debt-free. Remember, we reached out to the management for a comment. So far, we've not yet received a response from SW Solar.
Okay, all right. Thanks a lot for that, Vivek. Prakash, what do you make of this one? Sterling and Wilson, they're looking at a fundraise. Your take?
I think, it's something where look at the timing of what's happening now. This company had undergone such a severe crisis of sorts, crisis of confidence, crisis on the balance sheet. All of that actually has resulted into such a sharp drop in the kind of revenue generation capacity. If you look at the last 4 years, at least the last 3, I know, they've been absolutely a washout. I mean, they've just been dwindling in terms of revenue. The capacities that they have inherently are far more superior. So there's this huge yawning working capital gap in terms of, being able to execute and utilize a lot of the capacity that they had built. So, and that's exactly why they're still, got such a high leverage and all of that. Any fundraise on the equity side is going to be absolutely very positive. I mean, they did that some time back, and we've seen how, it's like very similar to what Suzlon did. QIP comes in, washes out all those over-leveraged positions, and then the company starts doing business as normal and gets profitable. So I think that's where Sterling and Wilson is, exactly poised at a turnaround point, inflection point, whatever you want to call it. But my sense is this will be very healthy. And if you get marquee investors who are there for the long haul and they're willing to kind of add to the investments at the right time in some near future, I think it works very well for the company. I'm quite positive on that. And as a matter of disclosure, we've been kind of recommending this to clients since the last couple of months, ever since we started sensing that turnaround happening.
Sterling and Wilson, the offer price was, I think, 780. It listed in August of 2019, and at that time, the price straight away had, crossed 600 rupees, and now it's sub 400 rupees. Yes. So it's gone through a tough time, but it started picking up. This year, the stock has rallied close to about, I think, 45%. Year to date is a rally, and today, of course, it's locked in an upper circuit, but the all-time high level on Sterling and Wilson is a price above 600 rupees. Let's talk about NHPC. The company recently spoke at the CLSA conference, where the company highlighted a decadal opportunity for hydroelectric power in India, with only about 35% of the potential capacity being tapped to date. To understand the scale of the opportunity in front of the company, earlier today we spoke to the Director of Finance, R.P. Goyal. Listen in to what he had to say.
At present, our installed capacity is 7,000 megawatt, and by end of FY27, our capacity will be double. So you can say we will be 14,000 megawatt capacity company by FY27, and by FY32, our capacity will be 22,000 megawatt in hydro sector, including pump storage. So we have a very aggressive plan in hydro sector, and we are going very well in our hydro projects. It is expected that in next FY, we will commission our 800 megawatt capacity Parthiv 2 project, and by FY25-26, we will add 2 more projects, which consist one of the biggest hydro project as of now of the country. That is Subansiri Lower 2,000 megawatt capacity project, and 120 megawatt Rangit 4 project will also be commissioned in FY25-26. Our current year's capex plan is 10,800 crore, and for the next 8 to 10 years also the capex will be in the range of 9,000 to 10,000 crore annually. And for incurring capex of 10,000 crore, we have to arrange only 3,000 crore from our internal accruals in the shape of equity. So for that, we have sufficient profit available in case of availability, and balance 7,000 crore will be arranged by of bonds, issuance of bonds and raising of term loan in the market, for which there is no dearth in the domestic market. But we are exploring foreign market also. to avail the cheaper interest rate. Our revenue will be in the range of 18 to 19,000 crore, and our PAT will be in the range of 7,000 crore.
Okay, very aggressive capex plans for the next close to a decade. This year, the company is spending 10,800 crore by way of capex, but for the next 8 to 10 years, annually, they will be spending 9 to 10,000 crore rupees. They're looking at a top line of 18, 19,000 crore by FY27, 3-4 years from now, with a bottom line of 7,000 crore. Prakash, thoughts on NHPC's aggressive plans, and what does it do to the stock from here on? Is it just the start of a big upcycle?
So I think, power, particularly the ones that have focus on renewables, the ones who are looking at, sitting with their checkbooks to do this, definitely it's very good news. But, I just have a slight qualification to make here that while NHPC has these mega plans and the scale is different, I like the smaller cousin out of this business, and that's the Satluj Jal Vidyut Nigam. Very similar profile, of course, not, as I said, as big as NHPC. And that's something which I like because it de-risks the entire thing. Even if SJVNL has done things in the past which have not taken off well, it's not kind of impaired the balance sheet very badly. And look at what's happening to SJVNL. They've last year, they closed the year with about 3,000 odd crores of revenue, out of which 1,300 crores plus was profits. I mean, it's quite different when you look at these companies, the kind of profitability that they make. And it's a long cycle that they are getting into. They've also gone into renewables. We keep on talking about, order books for companies here. There's an ordering book that you should look at. The kind of orders that they've placed for renewables is absolutely very, very proportionately very high for their size of business at this point. And that will start showing in the next couple of years. And they also have, of course, some money that could come their way. There's this dispute that's going on with the UP state government, and if that gets reconciled, there's some kind of optionality attached to it. So I would prefer that, not taking away from the fact that NHPC is also doing all the right things. But here the risk reward seems to be far more favorable, Rima. That's my submission.
Okay, all right. Well, Prakash, we thank you for joining in today and filling us in with your take on a whole host of stocks. Wishing you a good afternoon and a good evening ahead as well.
Nick.
Well, before we move on to our next guest, just pull up Union Bank. Union Bank has spiked up in the last few minutes. We're seeing a sharp spike out there. And Glenmark Pharma as well. So some of these frontline names, they're seeing a surge actually in the last few minutes. So let's get them up for you on the screen. Nippon Life India as well. That's another stock that's moving higher. So some of them moving higher and moving higher on large volumes. But time to welcome our next guest, Devina Mehra, founder, chairperson, and MD at First Global, who joins us on the show. Hi, Devina. Good afternoon. Always good to see you in. Well, the markets have been on fire, right? You got a favorable verdict coming in from a stock market perspective. The ruling BJP is likely to get another term. So continuity is what the street is factoring in. Flows as well are solid, but everything doesn't go up in a single line. Do you think the markets could be in for a bit of a pullback phase on the headline index, point number one? And point number two, at current reckoning, what's your preference? Would you stick to the large cap names in comparison to the mid caps that have had a big party this year?
Good afternoon. Yes, the market has been having a party at least this week. Though, I must also tell you that I've been around long enough. So I remember 20 years ago when the market got a negative surprise in that the NDA went out and the UPA came in 2004. And the first day, the market's reaction was very negative, but they forgot it soon enough. And, a month later and a year later, the market saw a great run. So, oftentimes we sometimes attach too much importance to the political results, which may or may not actually be the real driver behind markets. Coming back to your questions on the direction. So I've been saying for a while that I do not see the risk of a big crash, at least in the mainline large cap indexes. And the reason for that is very simple, that we have not had extraordinary returns on those indices. So we have this thing in mind that the equity markets give you 15-16%, but that whole decade of 2010 to 20, we got returns of only about 8.5%, 8.8% compounded. which was only a bit better than fixed deposits. So you had this whole room created when the market was far below the trend line. And even since then, because of the pandemic and various other global developments, you've not seen even that 15% return. So the risk of a crash, as I said, is limited. But you mentioned the small cap, mid cap bull run this year. So that's the part where you need to be cautious and limit your exposure. I have been seeing that the mutual fund flows have all been coming to that segment. In fact, there's been a net outflow from the large caps and a net inflow into the small caps. And risk is building up there because the issue with small caps often is that even if, let's say, you have a stop loss when the stock starts to fall, you actually don't get an exit. And the small cap index itself has had very huge crashes in the past. You saw nearly 80% crash in 2008-9. You saw nearly 2/3 crash, 65% drop in 18-19. So that's the kind of drop you saw in the index. And people who say that I'm choosing my stocks carefully, the point is that in those crashes, almost everything falls. At 2008-9, only 1% of the stocks did not fall. At 18-19, only 8% of the small caps did fall. So that's what you're talking about. So be cautious on that end. Be cautious on which sectors you pick. But the market at the large cap end, I don't see a huge amount of risk.
Okay. Devina, I wanted to get your thoughts in on banks. I can see that you recently cut your weightage, on the financial sector in your portfolio. Now, this is quite contrary to the opinion that we get on the channel, where everyone says that banks, financials, especially the large cap banks, is the place to go because of reasonable valuations. They've not participated to the extent that the rest of the market has. So can you talk about this, call of yours on the banking space, and what is it that you expect going ahead?
Okay, people tell me that I repeat this line all the time, that I'm always a nervous investor in banks and lenders, because in the lending space, you don't know where the negative surprises are hiding, and some of which were highlighted recently by the RBI and also the FM, saying that to be careful on the lending front. So, I mean, if I go back to when our PMS started in 2020 and 21, we had negligible exposure to the sectors, considering it's the largest weightage in the index. Middle of 2022 is when we went market weight in banks because, things were improving, credit growth was improving, and NPA cycle was the bad cycle was largely behind you. And as interest rates go up in the beginning, the banking margins expand because you increase interest rates on the assets or on the loan side, but the deposit interest rates go up much more slowly. So those are all the positive things. So for about a year, we were market weight on banks, and with price action, actually, it went to little overweight also. But now we don't think that this is the time to get into banks. Within the bank sector, banking space, we've been a little more towards the PSU banks in the last few quarters. So that's where we are, but we are underweight banks, and we don't intend to change that. And there are enough better places in the market. That's our view.
Okay, all right, Devina, and one of the better places, so to call it, would be Pharma. We are celebrating the Nifty up close to 14%, 15%. An unlikely winner, so to call it, has been Pharma, because the Pharma index itself is done 2x of what the Nifty is done. I think it's up 29%. You'll continue to remain constructive on that space?
Yes, but Pharma is one place where we started adding from, I think, January of this year. And each quarter we have been actually adding to Pharma because our systems liked it, and more of the names were showing up via our artificial intelligence system in terms of the, Pharma names were getting ranked higher and higher. So especially compared to the index weight, we have been quite overweight on Pharma. Along with, of course, the one sector we've been overweight on for over 2 years has been industrial and capital goods, which mostly people started talking about in 2023. But we have been overweight from October 2021. And every quarter we look at whether the story is over. But right now the signals have not come that the story is over. And what we increased weight on this year, Pharma was one, auto components was another one where we increased weight in this calendar year.
Why auto and auto ancillary? And in particular, do you want to zero in on the part of the auto or the ecosystem that you like, and why?
We've actually added, I think, a little more in the four-wheelers than in two-wheelers, though we have some two-wheelers also. So it has been, it was a sector which hadn't performed well for a few years, and this year we saw changes in pattern in that. And through the auto components, of course, you can get exposure more across the board there. I mean, auto, of course, there's been a kind of uneven growth. So if you look at auto in terms of the vehicle numbers, the luxury segment and particularly the SUVs did very, very well. But entry-level cars and a lot of the entry-level two-wheelers also haven't done well still, which is actually reflecting what's happening in the economy. So you have to choose according to that. But as I said, that was a sector which hadn't performed for a few years. So some of those valuations had also become attractive.
All right, Devina, we appreciate you joining in, giving us your take on the markets. And I think you celebrated your birthday last week. So belated happy birthday as well from myself and
happy
the entire
birthday,
channel.
Devina.
Thanks so much for joining in and discussing.
And your birthday is coming up for the channel, so
yes.
Happy birthday for that.
Thank you so much.
It's actually my daughter's birthday also tomorrow, so she has a birthday.
Lovely.
So double celebrations and triple if you join us tomorrow then, Devina.
Thank you, Devina, for joining in. It's, your daughter's birthday, my mom's birthday, and our channel's birthday as well. So good times, December 7th, a very, very special day for all of us. Thank you so much for joining in. For the time being, though, we'll slip into a short break. You come back, the markets are trending up. We'll get you an insight into D Street chatter. Nimesh is standing by to tell us what's going on there. We'll also get in some technical picks. Don't miss this. 50 points away from the 21,000 odd mark. It seems we'll have to wait for a couple of more sessions before we get there, because for today, the Nifty Bank is off color. That's the one that's been in form, smacking it out of the park. But today it's taken a bit of a break. And that's the reason why the markets are under some pressure. Nimesh joins us to fill us in. What is he picking up in terms of flows? Nimesh, what's your take today? The big flows, we have seen in the last few sessions. Do you expect another big day?
Looks like, Nigel, again, the sense I'm getting is that the FIs are better sellers, so you'll probably see a decent buy figure from the institutions even in today's trade. But, the screen is looking good in today's trade, but do remember in intraday, the Nifty had actually fallen, had actually gone into the red as well. So it's been a choppy day of trade and some bit of profit booking as well in the Adani Group stocks. Some bit of profit booking is visible in the auto names as well, especially the two-wheeler names on the back of that CLSA downgrade. But clearly, the flavor seems to be the PSUs. That continues to outperform even in today's trade. For a change now, some of the metal PSUs are back in focus. So the likes of SAIL, Nalco, they are buzzing in trade. And there was a big upgrade from Citi on the OMCs in the mid-hour trade today. And after that, you've seen a bit of recovery in the OMC names as well, especially HPBP and IOC. So the PSU momentum continues. That goes without saying. And there is a bit of interest as well. As I said, some bit of profit booking was visible even in pharma names in today's trade. But Glenmark actually stands out, is bucking the trend. Largely in hope that maybe that deal with the Glenmark Life will get closed very soon. So that's keeping the stock exciting. But broadly, the FI buying trend continues, and generally the sense is that the PSU outperformance is likely to continue.
Okay, and what about stocks, Nimesh? What do you have for us?
Srima, it's a long list today. So I'll start with the two stocks where large blocks are expected. So the first one is Shyam Metallics. That stock is buzzing in trade today and on good volumes as well. I understand there's going to be a large block deal very soon. Remember, the promoter still owns close to 81.5% stake. So maybe the promoter's stake sale will come largely to meet the minimum public float norm, but large block is expected in Shyam Metallics. And the second name where there's a large block expected is Aptus Value Housing. Even in Aptus, the stock has been consolidating, but I understand there's going to be a clean out trade very soon in Aptus as well. Looks like the P is likely to exit in that block deal. So these are the two expected blocks. Now, today there were a couple of large blocks as well. The first name was JTL Industries. There was a large block, and stock is under pressure since the block deal. But I understand in terms of identities, the non-promoter entity was a seller in today's block. But in terms of buyers, promoters have themselves bought is what I understand, including the mutual funds as well as some large HNAs as well. So disclosures will be important in JTL Industries. The second name where there was a large block was Canterville. It was part of my list a few days back as well. But in today's block deal, I understand some large HNIs have sold, and leading long-only fund is a buyer in today's block. So again, there, the disclosures will be important. The third is Capacit Infra. That's been buzzing within the infra names in the last many days. Even in today's trade, the volumes on the higher side. The sense I'm getting is maybe the company is likely to raise funds by QIP very soon. So that's Capacit Infra. And the last one is Geo Financial Services. After a long time, some bit of buying traction seems to be back. For the last couple of days, the delivery volumes are quite high in that stock. And I understand a leading long-only fund has been an active buyer in Geo Financials in the last many days.
Okay, thank you very much for that, Nimesh. We love it when your lists are longer and longer. So thank you for that. Let's move on. The government has sought a nod from the parliament for additional 58,000 crores spent on food, fertilizer, LPG subsidies this fiscal. Sapna joins in with the details. Sapna.
So, basically this 58,000 crores is primarily revenue expenditure, around 54,000 crores worth of revenue expenditure additional, and remaining 4,000 to 4,500 crores for capex. But speaking of the revenue expenditure, as you rightly pointed out, primarily food, fertilizer, and LPG subsidies is what the government is looking at. Also, some additionality for the defense services. So, all put together, that's a neat sum of around 30 to 40,000 crores additional in the big buckets. There are also a lot of small additionalities across the ministries and departments. On a gross basis, the approval that has been sought is for 1.29 lakh crore worth of additional expenditure for FY24. But the remaining part, apart from the 58,000 crores, whatever is remaining, that is going to be met by a higher savings or possibly receipts and even recoveries from ministries, and that's a routine and standard procedure. Just coming back very quickly on the food and the fertilizer front. So basically, for the fertilizer fertilizer. It's the non-urea subsidy that goes up, around 13,000 crores. So you will be looking at a total sum of around 1.88 lakh crores for fertilizer subsidy in the current year. As of now, similarly for food, a very minimal amount has been sought, around 7,000 crores, and on expected lines because the PMGKY had ended December, though the budget was up till March, but there is some margin that the government is factoring in. So you will be looking at a total tab of around 2.04 lakh odd crore for this financial year as far as food subsidy is concerned. LPG also, there have been a series of announcements. So some additionality on the cooking gas was already there. Some of the cabinet approvals are already in place. So basically, the government is trying to regularize the additional expenditure through the supplementary route, and you have the numbers in front of you. But the important point also is this, that revenues so far have been very buoyant. If you have heard what the chief economic advisor explained on the day the GDP numbers came out, he said the tax buoyancy is now close to 2%. It's around 2. It's more than double of what the government has taken in the budget. However, the fact also remains that additional expenditure, it's an election year, so additional expenditure is not ruled out. So 58,000 crores is what they are starting off with. We'll have to wait and watch and see what kind of announcements come through in the next one odd month.
Okay, all right. Thanks a lot for that, Sapna. Well, and getting back to the markets then, we're trying to move to the high point of the day, but it's being met with some selling. And that's the reason why we're back, not able to cross that 20,950 odd mark. Just one stock I want to pull up, ABB. That stock did well in the last few sessions. That slipped a little bit. And Berger Paints is another one as well. That slipped a little bit. So just thought we'll pull both of them up for you.
It's been another strong day for some of the Adani Group companies. Indeed. Adani Total Gas is locked in an upper circuit of 20%, though it's still about 71% lower year to date. But 2 days of, I think, an upper circuit on Adani Total Gas, and Adani Green too has followed up yesterday's 15-18% rally with a 16% gain.
Okay, all right. Well, let's get in Mitesh Thakur, who's joining in to give us a couple of trades. Mitesh, what are they?
Nigel, a strong breakout appears to be taking place on the charts of India Mart. After a good consolidation, the stock is up about 4.25% today. So BTST here with a stop below 26.90 for targets of 27.55. And the other one is BEL, which is a BTST with a stop at 154.5 for targets of 159.
Okay, all right. Thanks a lot for that, Mitesh. Well, I had a candid chat with investor Monish Pabrai. He spoke on a whole range of issues, from his own portfolio, his investments in India being a good investment destination. He also gave us his exposure here. Let's listen in to excerpts of their exclusive conversation.
I think that, and I had a lot of discussions with Charlie on this in the last few years, is I have, in more than a quarter century of investing, I have the most bizarre portfolio one can imagine today. So about half the money, close to 40-50% is invested in Turkey in 3 stocks. Another 25% or so is invested in the coal industry in the United States, and we have a little bit in India, and basically I think that I've never had this kind of a unusual concentration, but I also feel with what we own that basically don't need to do much for a while. So I find in general the US markets, which is where I spend the most time, to be either fully priced or overpriced. It's not a problem to identify great businesses in India. I find that it is a problem to find them at attractive valuations. I think the area that in India that might be very fertile might be small caps and mid caps, but one would really need to be in the country all the time and, poring over those, one business at a time and kicking the tires. So I don't see as much opportunity amongst the larger Indian businesses, but I do believe that India Inc. Will do extremely well.
Well, and you can catch the full conversation today. That's in the next 1 hour at 4:30 p.m. here on CNBC-TV18. Slip into a short break, come back. We'll continue our focus on markets, and Hemang Jani as well will be joining in for some stock talk.
Welcome back. Counting down to the close, Hemang Jani is with us on the show. Hemang, afternoon. Wanted to get your thoughts in on HAL and Cochin Shipyard. Another day, a big move. Cochin Shipyard up 8%. Year-to-date rally 140%. Hindustan Aeronautics 6%, 7% in fact, 115% higher for the year. What's happening here? What's the latest buzz on these stocks? And can it continue with this kind of a run?
Good afternoon. I think what we've seen, Rima, is that even after a stellar run that we've seen in the defense names, what's happening is that the additional order inflow and the expectation of further momentum there continues to build, and people also want to position for the pre-election rally, the general elections 2024, and in that theme, defense, some of the PSUs, CAPEX, that features. So I think, because of that, you're seeing a good amount of action across these names. I think HAL has been our preferred pick for a while, along with BEL, and we think that purely from a, next 3 to 6 months kind of a time frame, these stocks do well and the momentum would continue.
Well, hi, Hemang. Good afternoon. Good to see you. And Hemang, wanted to focus on a couple of other names as well. You have Balrampur Chini that's coming for some selling. What's your view on the sugar pack? Balrampur Chini, as we speak, is down close to around 7%. Have you heard anything? If yes, how would you approach these stocks?
Nigel, today the sugar stocks have corrected, but overall, if you see globally, the prices continue to remain firm, though in certain pockets of metals we've seen correction. But I think the soft commodities continue to remain firm, and the overall ethanol story continues to look quite good. So you will see days where there is going to be a correction in certain names because all these stocks have run up hard. So Balrampur is something that we've been liking. I think it would be a good idea to kind of accumulate on a day like this.
Okay. What about fertilizer? Big moves in names like RCF, NFL. What's driving these stocks up?
Prima, this quarter, there would not be any inventory related issues which were there last quarter. That's number one. Number two, you heard this news about the spend that the government is going to do across 3 to 4 sectors, totaling about 57,000 crore. So I think that and the fact that PSU in the overall scheme of things, people do want to have smaller allocation for fertilizer names also. So Chambal is something that we've been liking. RCF is something that we've been liking for a while. The stocks have run up, but it would be good to have a smaller exposure to these names.
Well, Hemang, what about, the metals pack? If I pull up the metals index, that one spiked up. And as we know, metals valuations actually is secondary. The key aspect to look at is momentum. Do you believe it has the momentum?
Until at some point, you will see the sector rotation come into play. So no doubt the initial, strength is seen in the CAPEX and PSUs and defense names, cement names. But at some point, you will see this moving into the other pockets also. Metal would surely be one of those pockets. And if you see globally, things are not that great in terms of the pricing, but I think the domestic oriented companies where it's NMDC or SAIL, where we are seeing a good volume growth guidance from the management, the spreads are reasonable. So I think these are the good names to own at this point of time.
Tata Power, is that a stock that you like? 4.5% gain on that.
Yeah, what a massive move we have seen in Tata Power. And recently, just I think 2 days before in the analyst meet, the kind of guidance that the company has given, both in terms of the core power generation as well as the renewable part, is quite encouraging. Plus, Rajasthan recently, they've got a big order. So I think power is becoming very theme where everybody wants to own. So within that, I think Tata Power is something that we've been like. The only thing is that the run-up is so sharp that it would be good to kind of enter on a small dip.
All right. Hemang, I wanted to ask you about Pharma. On Pharma, in the past, we've had a couple of chats on it. How are your positions right now?
We're not looking at the sectors like IT, pharma, and some of the defensive names. But I think when you look at the revival in the market and the fact that people want to have large cap exposure, so at some point, pharma will also have to be part of that. And quarterly numbers, by and large, from the large cap companies have been good. Even the mid caps, some of the names are talking about good growth in terms of generic, API. So I think Aurobindo, Dr. Reddy, Sun Pharma, these are the names that we would like to have. Of course, they will not have that momentum, but from a core investment perspective, they still look good.
Hemang, one more view I wanted from you on mid-cap cement. There was that hope there's going to be consolidation. Some of these stocks, they've seen some bit of profit taking today. Would you be a buyer? A couple of names like a Kesoram Industries going by the merger ratio, the stock could be headed towards around 170. But today there is some money being taken off the table because some of the investors, they had bought at very early levels, 70, 80, 90, 100, 120. What's your view out here?
The message is very clear that, there is going to be further consolidation in the industry. And as you've seen, few mid-cap companies being taken over and you see more news flow come through. There is going to be some sort of a catch-up. Because of the large cap companies going up, you've seen Abuja, ACC, Ultratech run up so hard. So there is going to be a catch-up. Secondly, if you see one or two deals happening, there is going to be some sort of a re-rating basis the valuation that they get. So I think it'll be good to have some exposure. We like, in the mid-cap space, India Cement, Ramco Cement, these are the two names that we like at this point of time.
Hemang, pleasure speaking with you. Thank you very much for joining in, counting down to a close, which has got to pretty much be at the day's high. So 20,943 on the Nifty, a 0.5% rally. The rally has now extended itself for the 7th consecutive day. And in these 7 days, the Nifty has moved up from levels of 19,800, in fact, slightly below that, to about 20,940. The day's high was 20,958. We got there in the first 10 minutes, 15 minutes of trade. After that, midday, there was a drop in the markets. The Nifty fell 100 points, but pretty much recouped all of it. And this is despite banks not performing. The Nifty Bank was down close to about 0.5%. The sectors which did well, IT and FMCG, both of them go home with a gain of about 1%. So the top two gainers are IT names, Wipro, LTI, Mindtree, and TCS also makes it in the top 5. So 3 out of the top 5 Nifty gainers are IT names. ITC was higher, L&T contributed. On the losing side, the CLSA note on two-wheelers put pressure on Eicher Motors, Bajaj, and Adani Enterprises. So most of the Adani Group stocks continue to do well, but Adani Enterprises came in for some profit booking.
Well, that's right. Remember, from the broader market, select pockets did very well, and some of them came in for some profit taking. RCF and NFL, both of them were running along in trade today. Adani Energy Solutions as well was up close to 7%. Select PSU names did well. Bank of India did pretty well. That stock was up and about. From the Ferrous pack, you had SAIL that moved up on rather large volumes. And from the non-Ferrous pack, you had Nalco as well. So some of these PSU mining names did pretty well. On the volumes front, well, you had JTL. There was a large trade that took place out there. Interesting to see the buyers list as well as the sellers list. Nimish has indicated that maybe, in fact, the promoter group that participated, JTL, not GTL. Let's get that up for you on the screen. And, so that stock ended down 6%, but that's because there was a large trade on that particular counter. You had another name as well. You had Bajaj Hindustan that was lower in trade. But on that note, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next.